overall sentiment, cautious dovishness with inflation watch. Powell's tone today at Jackson Hole was measured, leaning slightly dovish compared to earlier in the year, but still underscored by a watchful eye on inflation. Dovish elements. Acknowledge that the balance of risks is shifting, with downside risks to employment rising and the labor market in a curious kind of balance due to slowing supply and demand for workers. Policy rate is now closer to neutral than a year ago, giving the Fed more room to adjust if needed. Dropping the 2020 average inflation targeting framework in favor of a more traditional flexible inflation target, signaling a return to a simpler, more predictable policy stance. Hawkish cautions. Inflation risks remain tilted to the upside, especially from higher tariffs and tighter immigration policy that could slow labor force growth and push up prices. Explicitly stated, the Fed will not allow a one-time price level increase to morph into an ongoing inflation problem. Bank market interpretation. Equities. Stocks initially wavered. The speech didn't deliver an outright promise of a September cut, but the acknowledgement of rising employment risks keeps rate cut hopes alive. Traders are now pricing in a higher probability of a 25 bps cut in September, though not a certainty. Bonds. Treasury yields dipped slightly on the dovish tilt, especially at the short end, reflecting expectations of policy easing. Dollar. The USD softened modestly as markets interpreted the remarks as opening the door to cuts, but the lack of a firm commitment limited the move. Crypto and risk assets. Crypto markets reacted more sharply, with Bitcoin and altcoins sliding amid fears Powell's caution means no aggressive easing in the near term.